The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we will continue our discussion from last day, our inside day trading setups. Today we'll be looking specifically at first red day and green day signals and differentiating a first red day or green day setup versus just finding a down day, calling it a first red day, or an up closing day and calling it a first green day. Setups versus guessing. You want to build your muscle memory on templates that are going to make you money. In the last video, I mentioned to traders specifically about hunting specific easy money making setups. I've been going over this with traders, understanding that Friday is the closing range of the week. Monday is the opening range in the new week. That's day one. Tuesday, day two, typically expands the range. Wednesday, our midpoint range of the week, and also the reset day. So it's a day three on the front side, resetting to a day one on the back side of the week, the closing range of the week. Day two on the back side of the week, we can see range expansion trades if it's a trend trade, or range reversal opportunities if a market is reversing an initial breakout. And then Friday, of course, is the closing range. Now, specifically, how does this relate? Well, it's not about trying to trade one market each day and catch the move. We're targeting the best parabolic opportunities on any instrument based on this template. For example, we may have an opening range opportunity on an index on the front side of a week because a market on Friday has closed in breakout, as we saw today on several indexes. But we may get a day two range expansion on a currency pair tomorrow, where the indexes may just coil and go sideways or trade inside or go into consolidation. Wednesday, day three, we could see a parabolic day zero opportunity, perhaps maybe on the Japanese yen. And then day two on the backside, we could see a monkey hammer opportunity for an all-in high of week to low of week reversal, perhaps maybe on a metal. Don't know. We'll see when we get there. And of course, Friday is the closing range of the week. We could see a market that closes in breakout and potentially offers a great reversal trade or trend trade opportunity closing out the week. So we could have a different instrument on each one of these days that gives us the best parabolic trade setup on the day itself in the session that we're trading. Looking at natural gas on August 22nd, Thursday, and this is a blow off after a first red day signal on Tuesday. Now we're going to go backwards. We're going to work backwards so that people understand how should price behave on the day. What type of templates are we looking at? And I've always said this, on the day itself, you'll have one of two types of well-engineered templates if indeed that instrument is set up to give you a parabolic opportunity. And that is either a pump and dump template or a dump and pump template, which we'll look at with our first green day setups. So on this particular day, we had natural gas forming an initial boundary between Wednesday's closing price and the low made in the London session just prior to heading into our US window. Market has coiled sideways. It's already made lower lows. So again, we're going to work backwards, but I want traders to understand what a well-engineered template looks like on the day. Day one, day two, day three, blowing off in the direction of the trend. Now, levels, timings, behavior of price. Now, sometimes the market will give the first red day trade from closing price. Other first red day templates will give it from the high of the day. In this particular case, we're getting it in the US session 3, day 3, at the high of the session at the low of day level. Now, I made a point yesterday on the Inside Day video talking about when a market goes on a range expansion, the levels that I use projecting for potential profit targets are 100% expansion of the high of date, low of date level. This is the box. We've given a first red day signal, the market has broken out and pulled back. But the new day, this is our consolidation box, the high-low of day box. And you'll notice that on day 3, this market is auctioning back and forth approximately around closing price as well as 50% of that box. Again, it's 100% expansion of that range. The reason why I'm working backwards is that unless you understand what a well-engineered template looks like on the day, you'll continue to ask, is this a first red day or a first green day signal? So let's back this up a bit further. On Friday, the market closed in breakout short at the low of the week. Monday opens up and proceeds to go lower before pulling back inside and going parabolic and closing in breakout at the close of Monday. Monday closes in breakout, US session pumps up, breaks out, and reverses, closing back inside of Friday's high of day level, giving us our first red day signal. Now this is where traders sometimes get caught up. They take the trade in the US window the next day, they take the first red day trade, and they forget about it afterwards. They take the trade, they lock in profits, they walk away, and they look at different instruments the following day. But we now have a new day count once this level has broken. We have lower lows now inside of our low of week level. We've broken out, closed in breakout. We've reversed on day 2 back inside of Friday's high of day level. So understand we have breakout traders in the market. Where is the money on the long side if long traders are in the market on other time frames or even holding from US session trades on Monday? Lower lows on the inside is the setup for the pump and dump. Now understand that we have day 1, day 2, day 3 on the back side of the week heading into Thursday. The difference between the first red day on Wednesday on the back side of the week, the midpoint range of the week, and you'll notice midpoint range of the week, our reset has put a peak formation high above the first red day closing price. On Thursday, we have peak formation above closing price before breaking down, pulling back and coiling sideways, again at the low of day level of Tuesday, heading into our London US window transition. So we have day 1, day 2, but if we have a first red day parabolic range expansion opportunity, this could be an ACB setup. It ain't coming back. Now, the important thing to understand here is that building your muscle memory will help you identify the parabolic ACB opportunities, not guessing if something is a first red day setup because it had a down closing day. Now, for traders at the end of the London session window who recognize this opportunity, they had the opportunity to scale in prior to the US window, whereas US session traders now are targeting the range expansion on the low-hanging fruit continuation trade. So we have our pump day, our consolidation reversal first red day, lower low on the inside at our midpoint range of the week, coiling sideways underneath closing price for the parabolic blow off on day 2 on the backside, a range expansion on the backside of the week. Looking at last week on natural gas, we have our high of the month, high of the week heading into the new week. Market closed in breakout on Friday, and it took out the low of the week level, or right near the low of the week level on Monday, closing in breakout. So we have a market now that is closed in breakout below the low of the previous week's level. That market proceeds to auction sideways and break out a second time on Wednesday's close, the midpoint range of the week. Now, if we back this up a previous week, we have a weekly low down from the 23rd of September. But this market continues to break down on Thursday in the London session before reversing after gas inventories. Now, I just want to put a little idea into traders' head to understand when the market opens on Monday, our opening range, it goes lower. It breaks out again and goes lower a second time. Between closing price and closing price, we have other time frame sellers. Above Tuesday's high of day, above Wednesday's high of day, our midpoint range of the week, we potentially may have other time frame sellers above that level as well. Again, we've gone down and broken, closed in breakout, 1, 2, 3 days in a row before pulling back after inventories and closing as a up day or a first green day. But again, understanding traders, above these levels, we have other time frame sellers. I'm going to answer a couple of questions here. Number one, we're still making lower lows. Lower lows is potentially still a setup for pump and dump. Now you'll notice as we go lower, no high of day levels have been broken. We keep going lower, no high of day levels have been broken until Friday. Now I got asked this question on the weekend, can you go over break and structure? Now there's been, again, a lot of misinformation and confusion. It's very simple. There are only 3 levels on the chart that every single trader has. High of week, high of day, closing price, and low of week, low of day from the previous day's levels. When you come to the screen, every single trader on any instrument has these 3 levels. If you're looking at a 1-minute chart and trying to figure out where the break in structure is, you're missing the bigger picture and the opportunities that are driven by larger time frame players. These daily high-low levels are where your breaks in structure will occur. You'll notice on the way up we had a break in structure. On the bottom of day 2, the low of day level from Monday was broken, and the market proceeded to pump up 1 day, 2 days, and a 3rd day before breaking down. You'll also notice that on this week, no other days until Thursday closed outside of the opening range. A close in breakout outside of the opening range, and that's what started our first red day at the high of the new month for October, up at the high of the week after a close in breakout outside of the opening range. Immediately this week, we've already started our new week and closed outside of our range on Wednesday, the midpoint range of the week, made lower lows and pumped up into other time frame potential sellers. How does price behave on the day? We went over a similar example of this on the inside day trade where traders, where we talked about instead of having the pump and dump template, we had a dump and pump on the day itself. Now this is an example of where we have a market that is closed as an up day. What type of template do we have on the day? We have a market that has made a lower low heading into our US window, pumping back up into our high of day level, 1 hour, 2 hour, and breaking down into our 9 a.m. window after a lower low has been made for the pump and dump template. Not an ideal first green day candidate. It's a continuation in a market that is already broken down in the short direction. So differentiating a first green day setup versus an up closing day in a market that is in breakout on the downside. We're looking at the Dow Jones 30, and last week, beginning of a new month, we had a market that broke the high of day on Friday after non-farm payrolls. We have a break in structure per se, so we had a market that auctioned lower, taking out the low of the week level before reversing on non-farm payrolls. We now have a new high and low in place in our new month. On Monday, that market went slightly higher, making higher highs before failing and breaking down and working into the low of the month level. Large dumping day that dumps down into the low of the week, the low of the month level, the new month, coiling and reversing and closing not only as an inside day, which is a signal day, but a first green day on day 2, heading into our midpoint range of the week. How does price behave on the day? Now, another important thing to recognize is that with the new month, when Monday has dumped down our opening range of the week, again, I'll encourage you to go back and study, build your muscle memory, understand Friday's closing range and Monday's opening range. This potentially now could act as a floor. Friday's close may act as a ceiling. But how does price set up on the day after our inside day and first green day signal? First green day, page 64 in the playbook. Inside day, page 69 in the playbook. We can look for false break reversal opportunities, a trend trade opportunity coming out of a coiled market if this first green day sets up. Now remember, 2 types of templates on a well-engineered chart on the day itself. Pump and dump or dump and pump. We have a signal. How does price set up in the timing window on the day? Well, we have a market that's dumped down underneath of closing price before coming back and coiling into the New York Open. Now, this market exploded right on the New York Open, right through the high of day, in line with our thesis, a dump and pump template. Now, some traders talked about not taking this trade, but my friend Steven, as I talk about, he doesn't trade until after 10 a.m., whether that's a reversal or trend trade, not until a market breaks out. Our universal entry criteria, page 29 in the playbook, gives traders the opportunity to participate in this trade on a range expansion target ACB trade setup. Now, just like we just showed on the other pairs, typically on an opportunity like this, a range expansion trade, I'm targeting 100% expansion of the high of day, low of day levels once this market continues its move. You'll notice it's broken out, pulled back, third hour, continues the trade into the close of the day. A first green day parabolic opportunity, a scalable opportunity on the midpoint range of the week. Inside and first green day signal, dumping down into the low of the month, pulling back, coiling on top of the lowest close of the month for the explosive range reversal on day 3, the midpoint range of the week. Several traders asked if Thursday was a first green day signal on the Aussie dollar. You can go back and look at our charts again. We have the new month that started, the high of the month in September, highest closing price, lower lows, and breaking down and closing in breakout after non-farm payrolls, taking out, we'll just mark this off for traders, taking out the low of week level into non-farm payrolls, coiling sideways into our new week, and closing in breakout on Monday, day 1, the opening range in the new week. Now, this market continued to make lower lows and broke down, closing at the lowest close of the month before reversing and giving the green day signal. So again, several traders asked, is this a first green day setup? We're in a market that is broken out short, week 2, making lower lows heading into the closing range of the week. Contrast that again with the DJ30, a market that has dumped down and coiled sideways for the explosive parabolic reversal. We have a market that is in breakout short, continuing to make lower lows, the lowest close of the month. So coming back to understanding other time frame sellers, we can take the last close above that level, project it across. We have our green day signal. We'll place that box on top. Other time frame sellers could be above that closing price and high of day level. Now, the difference I want to make here is that, yes, traders have gone long on Friday night into the close, but differentiating the type of opportunity that this presents. This is a session scalp versus an opportunity on the Dow Jones that was an ACB. It ain't coming back, and scalable in size, driven by other time frame traders. The question is this a first green day setup? Not for me, it's not. This is not a first green day template. I would look for something else on Friday as my potential trade opportunity. If I was to take this trade, it's a nail and bail. We're trading into other time frame sellers above this level. 45 minutes into the second hour, just after the New York Open, gave traders a parabolic squeeze back up through the high of the day before reversing and closing back down inside of that range. Just contrasting the two different types of first green day, and then how does the template set up on the day? We had major red news at 8:30. The market drives down for 15 minutes before reversing into the second hour after the New York Open, coiling and exploding from closing price back up through the high of the day. Now, understand, what is the risk-reward opportunity here? Probably 2 to 1. Great opportunity for traders if they wanted to scalp that move, and then comparing that to an ACB opportunity that has continued closing in breakout, and making an inside day on Thursday. And you'll notice the similar templates, the dump and pump template, into the inside bar, a short squeeze, continuation, and the same trade again today on the opening range of a new week. Explosive first green day at the beginning of the month, the lowest close of the month, coiling sideways for an explosive range expansion scalable opportunity. And while we have the Aussie dollar here, we'll look at another example of a first red day trading setup. So coming back to just looking at the weekly template and understanding the monthly cycle, we have a market that in August continued to break out and make higher highs. And as we approach the end of the month, you hear me put this on the post in the community post, we're at the last day of the month or the new day of the month, which is particularly where we can see a directional change in market movement. We have a market that has made a peak formation. It's pumped up from the previous Friday on major red news, coiled sideways and given a first red day signal on Friday, the closing range of the week. Let's come back to understanding breaks and structure. We have a market that's broken higher towards those last few days, higher highs, breaking out again, and breaking the low of day level. But the last level that was broken prior to that, where our pump begins, a lower low on the inside, started on the Tuesday. And you'll notice on the Monday, that's our old friend, the inside day. And this is a great example where we've made lower lows and we get a close on Monday and people say, is that a first green day setup? Monday is the first day in the new month. Let's go back and contrast that again with the Dow Jones 30, a dump day, coiling sideways for the parabolic first green day trade. We have almost the exact opposite. We have a very large pump day closing and breakout heading into the last week of the month. That's our high close of the entire month. The inside day turns into a potential opportunity on Tuesday in the Asian session for not only a range expansion, but targeting the previous low of the week made on the Friday. Not the low of the week, but the low made on Thursday, Friday, where the pump began. Paul Tudor Jones, think of your entry point as last night's close. We've got our nice box heading into the new day, a coiled market, multiple opportunities to be adding into this with a thesis driven by other time frame traders. The point with all this is to build your muscle memory on setups that make you money, not guessing is this a first green day or a first red day and then looking for a trade. Where is the larger time frame thesis that can drive these moves for you? Why is it ACB? It's ACB because they have volume trapped up high and they're not coming back. They're going after the money down below these levels of traders that potentially are in the market from the previous weeks or holding on other positions or unwinding positions and rolling that over, accelerating the move back down. Which is why I repeat constantly, what setup are you hunting? Know exactly what an easy money-making trading setup looks like, how it should behave on the day, and know exactly what you're looking for, not just guessing if it's an up day that it's a first green day or if it's a down day that it's a first red day. What is the template that is setting that opportunity up for a large scalable parabolic rinse and repeat trading setup? Bill Lipschutz, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. You make a lot of money on scalable opportunities. Catching moves here and there, again, I always ask the question, where is that scalable? Catch this move, catch that move, I grabbed the high, I caught the low, but where's your scalable opportunity where you can make a lot of money and keep scaling that up in size? Jim Rogers, I just wait until there is money lying in the corner and all I have to do is go over there and pick it up. I do nothing in the meantime. Repeat this again, most traders cannot sit on their hands. They don't really have an edge in the market. They're just trying to trade movement. They want to trade every day. Catch a move, I got some pips. I caught the high, I caught the low. They overtrade, they get emotional, they get impulsive. They engage in irrational behavior when they get behind the keyboard. When they get behind closed doors, they do all kinds of things that have nothing to do with easy money-making trading setups. It has to do with trying to trade a market. And they self-sabotage all of the good results that they get otherwise. Master the setups. Understand how they should behave on the day. Be patient. Be willing to develop that skill set in live time. These trading setups are not going to go away. These opportunities rinse and repeat with subtle variations, but when you have an ACB template, you get these scalable opportunities, markets setting up to scale into, and they're not coming back. These are rinse and repeat ACB trading templates. Opportunities to scale your trading account up quickly. Being patient, understanding what a well-engineered template looks like on the day, understanding how to execute that in live time, and understanding when to stay clear of a market and not engage in a science project and try to prove how smart you are by catching a move. Well-engineered charts are exactly that. They're specifically engineered and they behave in a certain way in the timing window with very little hesitation in getting to their targets. And when you have these opportunities and they don't come back, there's very little stress, emotion, zero thinking, and zero trade management. Focus on opportunities that you can compound your account with. Stay away from science projects. Keep it simple. Be willing to sit on your hands. Master one or two templates. Keep it simple. Scale them up in size. And may the markets go with you.